Good morning, team. Can you hear me okay?
Now I can hear you.
Yeah.
So we're going live in about 6 minutes, but we already have some guests in the room. Sorry, everything's being recorded. Can you hear me well? You good, Alan?
I'm all good. Thank you.
Thank you, sir. Thank you for this opportunity, Alan, and for helping us. While we're here, I'll introduce you to Joe Kirgues. I don't know if you can hear us, Joe. Alan Russell is the CEO for Tecma Group. They're a large shelter manufacturing in the region. Alan, I don't know how many operations you have, but I think it's over 60. He's the largest employer in our region. So he's been an asset in manufacturing.
Nice to meet you. Pleasure. Thanks for helping make this program possible. And just as someone who works with entrepreneurs, I'm sure it's been an incredible road from where you are, from where you started to being the largest employer in your region. So in that context, it's really a pleasure and congratulations.
Yeah, I was at his age when I started.
Hey, Joe, when you come and visit, we definitely got to get together with Alan. I think there's a trip on the way sometime in the future.
Oh, I was promised, Mariana promised me some of your areas, the equivalent of tequila. So I'm excited and ready to come and enjoy and would look forward to it. And please, Alan, if there's a chance to tour your facility and meet your team as well, I would be grateful for that. I look forward to it very much.
It'd be my pleasure. So where are you? So where are you looking?
I'm in Wisconsin. So we started, I'll talk more about it in a couple minutes, but we started the company really as a love letter to home. How could we help our community invest into itself? And it just sort of expanded from there. So we did that for 3 years. And then in our 4th year, we expanded in Minnesota as a kind of just, fortuitously. And it's grown to over 25 cities in the last 48 months. So really a lot, but the part that drew me to it is I love working with people who build something from nothing. And that's right. Again, thank you, Ricardo and team, for having me. And but it's I can't believe I get to do my work every day. Helping people build companies is a lot of fun. So kudos to all of you for willing to work together. I know it's a lot of work and try to make the community better for the best.
Awesome.
Alan, what do you guys make?
Sorry, Joe, can you repeat?
Alan, what do you guys manufacture?
Sorry, the music is kind of overlapping our voices. We have 35 factories in the city of Memphis, where the hub is. And it's every technology, development, auto, plastics, electronics. It's a remarkable technology expertise that we have. You can find somebody with experience in rotomold, metal fabrication, extruding. It's really.
Well, Well, I'd be grateful. I'd be grateful if and when it does come to tour. That sounds remarkable. So I'm love to check it out. But
No, the only way you grow a company is with people, right? So
Morning, Joe.
morning, everyone. Is that JJ? I couldn't see it.
Yes. Yeah, finally. I had to switch organizations to get in.
All good. Nice to see you, JJ. Or nice talking to you. Thanks for having me.
Yeah, thanks for joining us. Excited.
The music is pretty quirky. Got to work on that. All right. Well, good morning. Good morning, everybody. And we'll wait as we let our guests in for about 30 seconds to a minute. How can everybody hear me well? Good. We'll give it a minute here. And Mariana, you let me know when we're good to go.
hey, Ricky, can you hear me?
Yes, I can hear you,
On. Crazy as it sounds, I have a head cold. I thought that was impossible during the pandemic. But if I start losing my voice when I talk at the end, step in and rescue me and take over, okay?
We'll do, Alan. No worries. Thank you, sir. Appreciate it.
I should be better, but I don't know what's going on.
No problem. All right. Well, I'd like to welcome everybody. I know we're online now, and I'd like to welcome everybody to the fourth cohort of the Bridge Accelerator. Thank you for joining us today. The Bridge Accelerator is a binational supply development program based out of El Paso and Ciudad Juarez in partnership with Pioneers 21 and Fundación Axel, which is the nonprofit organization that runs it. We're excited to have this fourth cohort. It's been a journey, and we're very excited to showcase this new kickoff. Today, we'd like to give thanks to our sponsors, Microsoft, Pioneers 21, Tecma Group, and Alan Russell is here today. He'll be part of our closing remarks from Tecma Group, the City of El Paso, the Undersecretary of Economy for the state of Chihuahua, CESA Medical, which is another manufacturing sponsor in our region, Transtelco, the Hunt Family Foundation, the Fix at Arrowhead, New Mexico State University, Westar Bank, High Desert Capital, CIDER, FIDEAPECH, the Juarez Municipality Government, Juarez Independiente, Borderplex Alliance, Desarrollo Económico of Ciudad Juárez, Desarrollo Económico of our city in Ciudad Juárez, Detroit Axle, Fundación Axel, Novamex and Jarritos, and Workforce Solutions. Thank you to our 2021 sponsors. Without you, this would not be possible. And as you know, we have gone into a full virtual presentation. So thank you for taking the time this morning. It's going to be a great conversation. And without further ado, I would like to present our guest speaker. Our guest speaker is Joe Kirgues. He's one of the co-founders of Generator 8, which is one of the nationally recognized accelerators for startup for music and art. It has over 30 programs in 25 cities, from Anchorage to San Juan. They have conferences ranging in different, from insurance tech, from meditech, manufacturing, ag tech, ed tech, and corporate impact. They've graduated over 75 startups from Generator, and today have raised over $500 million. So it's our pleasure to have Joe as our guest speaker today to help us learn more about what they're doing in this collaboration, and also showcase what we can do as a community with other companies from the U.S. So Joe, welcome. We'll be having a cup of Joe with you this morning. Welcome, Joe. Bienvenido.
Bienvenido, and thank you for having me. I'm thrilled to be here. I'm going to start sharing my screen and make sure I can get my content up. It may take me a second as I load, but I want to thank everyone for coming today. It is a real pleasure to be here. Just as importantly, I want to congratulate everybody. This is the beginning of a remarkable program. You're with a great group of people. I've offered to them as we get going that if there's anything I can do during the course of your program, that I'd like to be sort of an honorary joiner. So if past my talk in the course of your one-on-ones, any of the participating companies would like to connect with me, I feel like I've sort of honorarily joined the cohort for the program and would be grateful. But regardless, I know you're with a great group of people and excited to share more with you today about our company. The purpose of my talk is, as Ricardo mentioned, a cup of Joe. And I'm hoping to talk about, as you're looking at raising capital, some of the lessons we've learned along the way, some of the perspective we've gained that might hopefully help you as you're thinking about the different financing options, and then also taking a moment to just share a bit about, from our perspective in venture capital, how does that impact you both as an industry, as a participant in that industry, and as someone who might consider raising venture capital, or at least as a reference point that you consider the trade-offs that venture capital has to offer against the alternative forms of financing you might consider. So thank you for having me. I don't quite know, can you see my screen or see my presentation? I have a red box. I'm not quite positive if you guys can see it yet.
We can see it, Joe. It's not on presenter mode, but we can see it.
Okay, hold on, I'm just going into, sorry, I'm trying to put it in presenter mode. But thank you for having me. Hopefully I can figure out how it's not letting me go into full screen. So apologize, guys. It may be a little bit like this until I figure it out. First, thank you for having me. It's a real pleasure to be here today. The program you're in, like I mentioned, is second to none. There are not enough advanced manufacturing and manufacturing SME focused programs. So that you haven't just found a great local program, you found a great program. I am so honored to be with you today and really grateful for the chance to introduce more about our company and our work. As I mentioned, I'm hoping to introduce myself, provide a sort of a high level on what we're seeing in terms of as you're looking at raising venture capital, some things to consider. To explain that in the context of how we see venture capital in the manufacturing industry, and then also some key startups. I was talking yesterday, I know some of you involved, for example, in 3D printing a shoe, and I found a 3D printed shoe startup to give an example of comparables we think that might be informative as you're considering, what your next steps could be. As I introduce myself, we always begin by introducing our mission. Our mission is, how do we strive to be the best partner for a community to invest into itself? We think communities that are the most passionate about their next generation give themselves and all of us the best chance at success. Our goal is, how do we help communities that we work with create transformational outcomes by facilitating new job creation, by new leadership, and new community wealth? Not just wealth, but how do we make it so that a community feels like it's better off because of the whole activity? That's why our company rolls out of bed in the morning. I guess if I had an initial thought in this cup of Joe, I encourage all of you to think about and be comfortable introducing yourself in the context of your mission as well. I think the more as entrepreneurs you think about what that is, it really more often than not requires a conversation about how you serve your customers and how you draw people into your work. And as I've grown in 9 years of building my own startup with our own employees and our own payroll, I can't say enough as you're thinking about this program and how it could begin to impact you, that, you know, introducing yourself and leading with your mission, you know, just as hopefully we're setting our own example, I think it makes such a difference in how anyone from customers to employees to even how you frame your own activity. It's a really important advantage. As for our story, my co-founder Troy and I, we began our company about 9 years ago. And the idea was, how do we write this love letter to our hometown? How do we facilitate not just the construction of new buildings, but drive them by helping build companies that fill the floors? At one point in Madison, the tallest building, the top 9 floors, was filled with our alumni, and all from scratch, all, you know, entrepreneurs who came in with a trash can dream and built something from nothing. And it speaks to this idea of how do we support you in this program as participants and people, and not just companies or leaseholders or asset holders. But as we're looking at supporting startups, it fundamentally for us revolves around, we're fundamentally here to serve people. We've grown from my co-founder and I into a platform. We run pre-accelerators and accelerators. We work with corporate programs, and then we run programs in music and art, as well as a program for individuals seeking to upskill. And that's really one of our Microsoft's our foundational partner there. The idea behind these products is we have a primary program, our accelerators, and a secondary program, our corporate network and investor network, that we use to support our graduates by helping them gain access to customers and investors. I'll say, as you're with the Bridge program, this is one of the best programs in the country in helping you think about how to work with and even helping you secure partnerships with customers. And as you think about accelerators, it really reflects this idea of use us as sort of a air traffic control for you to go into and out of the destinations that you seek. And as you're looking at the Generator platform, that's really what we are, an air traffic control for the best and brightest in our community, whether they be artists or musicians or upskillers, startups emerging from universities or community-based Main Street businesses, to gain access to the customers, the employees, the mentors, the investors that they need to thrive and succeed. As some examples of how we help our startups, and one that I want to make available as a partnership opportunity with all of the participants in this program, our company runs manufacturing and insurance conferences. So what we do is, pre-COVID, we would rent a stadium, and we would basically have every corporation get a luxury box suite in that stadium. We would get a list of startups that applied. It was free for the startups to apply. It's free for them to come if they're selected. And we allow the corporations to pick 10 or 15 that they want to meet with one-on-one for 20 minutes each. And so we'll facilitate over the course of a day, oftentimes hundreds of one-on-one meetings with participating corporations and startups in order to help them understand how to get access to customers, revenue, mentors. For all the participants in this program, if you are interested in participating in this, please follow up with the Bridge team. We'll be hosting our next on-ramp event this August, so plenty of time to apply. It's free to apply. Last cycle in manufacturing, we had over 60 large manufacturers. In addition to the brands you see here, it was anyone from Boeing and Airbus to Caterpillar. I'm trying to think of someone at the Z's, but you get the idea. A lot of some Siemens, the biggest brands in the world, that were participating and taking meetings. It's available to each of you. In the event that our other conferences are of interest, please go to our website. We run, as Ricardo mentioned when he introduced me, we run these programs in ag tech. We also run them in workforce and education development. And if there's any overlap in these adjacent industries that you would like to meet with corporations, please feel free to apply. And if and when you do, reach out to the Bridge team and have them let us know you applied, and we'll do our best to make sure that you get an opportunity to present, and that we're doing what we can to help make the case for corporations to want to meet with you. So hopefully, as I'm introducing our Self-Fire product, again, our accelerator product that we run across the country with startups, art, and music, I also want to introduce ourselves by our outcomes. Generator has run over 44 programs to date through 24 cities. We've invested in over 100 startups. Our graduates have gone on to raise over $500 million. It's soon to be over $1 billion of follow-on financing. They've created over 5,000 jobs. 90% have raised more than $250,000. Almost 60% have raised more than $1 million. And we do our best to also track our performance by diversity and gender and status, such as veteran status. And we publish those on our website. So if anyone's curious to learn more about our work, but it's a very concierge program where we take in 5 startups at a time, and we work with them to help raise follow-on capital that's best suited for them. And it's that perspective that's driving the thoughts I'll be sharing in just a moment on, as all of you are looking at raising capital, how we've helped our startups frame that task and evaluate what's the best fit and how to get the most and best terms from different partners. As a result of all of our accelerators, over the last 5 years, we're actually the most active investor in the Midwest, where I'm from. We invest all over the country and the world, but just given our geographic proximity, we're proud that relative to even the big funds in Chicago and Minneapolis, we're really some of the most active in the middle of the country, and generally speaking, one of the most active nationally. And that's enabled us to syndicate with downstream investors who are able to invest into our graduates. So we're a pretty small fund and we invest very early, but we're proud that our graduates go on to raise from groups like this. And there's actually 4 slides like this. So this is just a fraction of the funds that our graduates have been able to syndicate to. But again, as we're talking in this conversation about how we think about companies like yours going out to raise capital and collaborating with the Bridge team, it's this type of experience that we're using to try to drive that perspective and the framework that we're hoping you might employ. From all those accelerators and all that work, we're proud we've been recognized nationally through a couple of different opportunities. So there's a group out of MIT and Rice University. They rank all of 250 plus accelerators. In each of the last 4 rankings, we were in the top 15. So we're in between Stanford and Berkeley's program. If you've ever heard of 500 startups, we're in the same tier of ranking as them. So we're really proud that we're able to do that work, but notably, we're the only one doing that work outside of Silicon Valley, that in LA and New York City. So we're proud that that work can really extend to any community across the country. And we're proud that Fast Company in 2020 recognized our music and art programs as amongst the 10 most innovative in music and art for taking that startup model out of startups and applying it to more sole proprietors and LLCs like musicians and artists. We're also proud of our partner list. So across our 24 or 25 city footprint, we're proud that we've been able to work with a lot of large corporations ranging from Allianz to the Motown brand to Microsoft to Bex and agriculture. So it's in Rockwell Automation and manufacturing. So it's been a good stretch for us and built a really great base of partners for whom we're able to try to facilitate introductions through the wide scope of startups we're fortunate to meet and work with. And our company, we're really proud. We've got a diverse staff of over 65 full-time employees. I was talking to the team yesterday. At least 3 of our employees are born in Mexico or first generation, and I think it could be as high as 5 or 6. So we've got a really diverse group in the company, and we're really proud of that. And we're very intentional about trying to build a company and a portfolio that matches the communities we serve. We think, as communities in our mission, that's something that the community deserves back. And we've been growing out. So we started in the Midwest, where I'm from. Again, I described it as a love letter to home, and it's become this love letter to the 24 cities we're fortunate to serve. But we've been going from the Midwest to the South and to the West, with most recent expansions in Anchorage, and we have to update the map, but a subsequent expansion into San Juan, Puerto Rico. So the generator time zones of the day is getting longer and longer in a fortunate way. Which brings me to the Cup of Joe conversation. And again, hopefully if you have questions in the Q&A or areas where after this introductory session, if you'd like to follow up with me and I could be helpful and work with the Bridge team, please, I know this is a lot to cover in a little bit, but I wanted to outline, as I've introduced myself and our company and how we've grown from my co-founder and I to this accelerator platform in 24 cities that works with a lot of investors. We've had lots and lots of investment meetings. So I've been to lots of banks, to lots of alternative financings, to private equity firms, and more venture capital firms than I think you might ever hope to meet in one lifetime. And we've had a lot of success, but a lot of scars and a lot of lessons learned, a lot of humble pie. And if from all of that, we have some perspective that might be helpful to share today. Really grateful to talk about how, as all of you are thinking about financing your business, whether it be SME or a startup looking for venture capital or just a Main Street OEM, with the CNC, how we think about this task. And really, there's 5 steps that we recommend everyone think about. And regardless of whether you want to grow on your own cash or you want, the biggest venture capital or private equity firm in the world, we think this is a really healthy exercise for you to do, probably on an annual basis at the very least for, an hour or 2 at a minimum. First is study the options. I think understanding how you're financing your business and what you could pursue for financing is just always a good idea. It's sort of thinking about, do you want to take your car in for a checkup and check the oil and the engine and the tires? That same type of cadence, you want to think about how you're financing your business. So if you're taking your car into the shop, it's maybe a good cue to think about taking your business into the shop and think about its financing options. Once you've studied those options, we recommend every startup choose their ideal path. If you could finance the business in a certain way, how would you do it? Maybe that's exactly like what you're doing and you're going to keep going the road you've been going. Maybe this is going to be an opportunity for you to reassess and change paths. The third is be really intentional about who you could work with. And I'll talk more about even this part of the process. We try to make it a little bit deeper than maybe people would otherwise go. But, one of the biggest risks is that you miss something that could have made a huge difference. And I think putting the time into not just choose your ideal path, but really think about how people and who could help you get to that outcome is really critical and not something I see a lot of small businesses and startups miss. The fourth is, once you choose who you want to pitch, understand what makes them tick. How do they frame success? What does a yes or no look like? And then finally, get in the room. Do not self-defeat. Pitch to their yes. Understand who you want, understand what makes success look like for them, and pitch yourself to that success. We find startups, it seems simple, and for small business, it seems simple, but it's one of those things that, if you miss, if you don't change your oil, the car doesn't go well. If you don't think about how to make sure your business is well financed, it just one day sort of kind of catches up to you. And by contrast, if you're doing this right, it's the type of very subtle incremental advantage that oftentimes differentiates first place versus 5th or 6th place. When it comes to knowing the options, the first step in this process, we see 5 potential paths for a lot of businesses, and I think in the SME space and manufacturing generally, I anticipate this is about right. The first is just running on your own cash, which is what Generator does. We cut our own payroll. We run off our revenues, our accounts receivable and payables, and we track that on a weekly basis, and we believe that's best for us. But a lot of businesses, by contrast, they want to get loans from traditional banks. Right now, the American Rescue Plan has put $8 billion more into CDFIs, for example, community development financial institutions in the U.S., and they need to make a lot of loans. So if you're looking for a loan, interest rates are still good. This is something that I think everyone in the program should at least spend a little bit of time thinking about. The third path is alternative loans. And I think this is for businesses with physical products and physical plants. This is oftentimes a far more viable path than the market explains. There's data from the Right to Start, which is an advocacy group for startups, that 80% of small businesses and startups don't qualify for either venture capital or loans. And we just don't see enough written about the factoring, the revenue-based financing, and alternative lending models that could be a good fit for many businesses that need capital to facilitate customer orders, key hires, just working capital for payroll, and don't have options beyond the equivalent of payday lending to finance their business. And as you're looking at this for your business through this program, definitely an option to explore, and one that I think accelerators oftentimes can be helpful in helping to solve. Then you're getting into the more risky lending assets, so private equity and venture capital. I'm a venture capitalist, so we're kind of highest risk, highest reward, highest threshold for what we need to see from a company's growth and margin. But for a lot of companies, it's oftentimes the only path they have to get the financing they need to thrive, and it's driven a lot of wealth creation in the United States. So even the differences between private equity, which tends to buy companies or buy large majority stakes in them, versus venture capital, which tends to buy minority shares, is very different. And as you're looking at your options, definitely one to spend time learning and exploring. These are all industries that require their own professional skill and can be very intimidating at the outset of programs like this to try to think through how you could learn so much when it's so complicated. And again, you've got incredible partners here at the Accelerator who can help you with this. So please, 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 as much as this might seem more or less comfortable, please, commit to working with this program and the great people in this accelerator to help get this right for your business. Next is choose your ideal. There's trade-offs in every options. I think if somebody tells you they've got the perfect plan, be suspicious. If they say that they don't need to think about this, be suspicious, because that's oftentimes when they're the most unaware of risks that they're just not factoring into their thinking. But every path you choose to finance your business, you should think about what are the risks of the path I'm choosing. Generator is a bootstrap business that works with venture capital businesses. So we see both sides of this. At Generator, we haven't really sold equity. We control the cap table, but we are against competitors who are using venture capital to grow faster than us, and they may win the race as a result. And we have had to balance our strategy against the risks of financing for our competitors and how they're pursuing their strategy. So as much as we might believe our model's best, it's not just stationary, it's dynamic. How is everyone else in our industry thinking of the same question, and how do their answers affect the probability of our own success and our opportunity to fulfill our own ambition? So it's definitely one that I'd be thinking about. Okay, well, if someone chooses the alternative path, if my competitor chose a different option, how does that affect my strategy? And then plan for your upside. It's not just about risk. What is it that if you were to succeed and thrive, the whole point of these financing options are because you believe in your company and the models that you have to succeed. Think this through, and then finally plan. Plan for it going below your expectations, plan for it going above your expectations. If you're getting 2, 4, 6, 8 weeks out of a financing and it's not going to plan, be very transparent with your investors and think about, what assumptions you made that were maybe incorrect and how you need to readjust. Once you decide on your ideal financing option, list all of your prospects. If you're bootstrapping, this means more customers, more accounts receivable, more planning for how you're going to go out and get the people you need to grow. If you're taking alternative financing or lending, if you're taking venture capital or private equity, the more people you can ask, the better. Whatever list you initially would draw up, set a goal of making it 3 times larger. The volume of opportunity here is very up and down. So if you were to ask the 8th or 9th lender, you might get a substantially better term and better revenue or financing options than if you only go to the 3rd or 4th in line. My analogy on financing is it's like casting for fish. If you don't cast, you don't catch. If you cast 2 or 3 times and conclude there's no fish there, that's more about your casting approach and less about the presence of fish in a lake. So you're going to want to spend time to make sure you cast enough that you know if you could catch a good fish or not. And it's something that makes such a difference. I can't stress enough, get in the room. Just if you're going to be raising capital, make sure you're in the room with people beyond this prospecting to not just have a list of people who could finance you, but make the effort to get to know them. These are professional investors. They're supposed to meet with people. They won't be upset with you if you bring a bad deal in. There's no sort of imposter syndrome risk here. If you think you could benefit from financing your company to grow, or you need to bootstrap and get customers, make sure that that's top of mind for you. Bootstrap and finance on your customers. Once you decide who you're going to pitch and what you're going to be pitching them, loans or alternative lending. Understand what makes this a success for them. My business partner's advice on this is ask for money, get advice, ask for advice, get money twice. So which he stole from Pitbull, but make it so that when you're pitching them, you know what makes this a success. You make money, they make money, and then talk to people who've received that financing. It's really important. And then finally, pitch to yes. Get in there, make a presentation. We always suggest a 4 to 5 minute PowerPoint, have an executive summary, a 1 to 2 pager on what your company does, a monthly budget, and from there, concierge follow up with whatever additional information they might need. What I'll say is, and I'll go more quickly through this, but at a high level, what's going on in the industries in manufacturing and SMEs, right now we're seeing, part of how I'd frame this and transitioning kind of to the venture side is there's a lot of change going on, and it's making it so that volatility is both the opportunity and the risk. But there are falling hardware and software costs across this industry. There's the explosion of big data in manufacturing, and a lot of legacy systems that are creating both opportunities and difficulties for organizations to drive change. A lot of companies are running on the same software they used 20 years ago, and in an industry with a lot going on, the question is someone using a more updated technology stack that gives them an advantage? Oops. That results in pretty clear changes in the industry, in that sensor costs are falling, computing cost is falling, networking cost is falling, and as we're seeing this change become easier and more accelerated, we're seeing a very wide set of strategies for manufacturers on how much they're keeping to legacy systems or adapting their models to this changing environment. We anticipate this will be a part of every one of your businesses, if not business models. And that's producing a parallel amount of change in the venture industry. Many organizations are creating their first corporate venture capital funds in their history. And I'll show the growth in corporate and venture capital investment, but these are differences of kind from the last 20 or 30 years for large manufacturers. And I anticipate that you'll see more and more alternative financing options like venture capital and factoring and revenue-based financing coming to the industry as a result. That's producing, this is up to 2017, but you're seeing an increasing amount of volume in manufacturing tech. So you'll see more and more companies and venture capitalists and private equity chasing deals in your space. So anticipate more options tomorrow than yesterday. And as I'm pulling up, sorry, it's a little fragmented, but as we're pulling up the venture capital data in the last 8 quarters, you're seeing about $1 billion a year, which is up substantially over that 5-year period. So you're in an industry that's changing, it's changing quickly, and I'd expect there to be more and more venture capitalists and private equity firms at the table by the month. As a result, if you're in one of these spaces, robotics, 3D printing, predictive analytics, if you're employing these technologies in your business models or in facilitating manufactured products, anticipate you're going to be working with startups, you're going to be potentially considered a startup, you're going to be looking at partnering with startups because they're changing the value stack of everything from how goods are shipped to how the production of facilities is managed. So that means probably more direct revenue challenges. We think that means there's going to be increasing difficulties or opportunities in how much people make per manufactured product. And we think in some ways we're optimizing for the inevitable. More and more corporations are hiring their first VP or CIO, VP of IT or CIO. This is a very changing industry, and the speed of technology adoption and financing is growing by the hour. So as you're looking at working through the bridge, thinking about how this change impacts you and your plans, I think is really critical. And again, there's whole industry studies about what this means in terms of companies looking to make their products more and more automated. There's this vision of the dark factory that produces all of its goods in the dark because everything's so automated. I think that's more of a vision than it is a reality. But I would anticipate you'll be seeing a lot of this in the course of your work. And what that means is 3D printing taking off. It means more manufactured or automated production on floors, and it means more room for startups. So companies like Rethink Robotics, which is really taking off right now. The 3D, I was talking, I understand some interest in 3D printing shoes. So Carbon is an example of a startup like that. And then our portfolio generator, this is the very first MVP. If you go to the website now, it's much better. But the very first MVP for blockchain-enabled manufacturing for OEM, something we've invested in. Factory Fix, which is a labor marketplace for specialized production. And Akita Box, which manufacturers use for facility management. But, we're not just saying we think there's opportunity here. From our fund, we've been actively investing into the future of manufacturing, and it's not just for big companies. Many of you are going to be at the forefront of that. And I think it's a really exciting time for all of you as you're looking at the road ahead, as you're looking at how you're going to be building your company. I think this is one of the most exciting decades ahead in terms of both the possibilities for manufacturing in North America, as well as for the ability to use technology to drive better outcomes than ever before. So I appreciate this opportunity very much. If you're interested, I'm Joe Kirgues on Twitter. This is my email, our company website. I am so grateful to have had a chance to be a part of this conversation with you today. This is just such an incredible group you all find yourselves in. I'm anxious to answer any questions you all may have. And like I said, it's a standing offer, for this cohort and any others that, to the extent that our perspective or engagement might be of interest to you, we would look forward to joining for any discussion, and just so grateful for the chance to share more about this with you today. Special thanks to JJ, who introduced me to the group, to the amazing team at the Bridge, to Mariana, who helped facilitate me being able to somewhat present in PDF format to you. Just grateful to everyone, and such an honor. I hope you all have the best experience in this program, and happy to answer any questions.
Well, thank you, Joe. So I'll be handing over some questions to you. But again, appreciate your insights. Yeah, I mean, you have a very wide view, being across such a wide geography and a lot of communities. I think really anchor around manufacturing, anchor around healthcare. It's something I think we see particularly in the Midwest, and kind of the center of the country, where at a really unique point here. We're at the intersection of the USMCA agreement, El Paso and Juarez. There's almost, when you look at the ports, the 7 ports in the region, is almost $100 billion of trade that moves through our region. And so we have 2 questions, and I'm going to kind of combine them into one here. So the first is, how we have somebody that attended, On-Ramp Manufacturing Conference, 2020, and in 2018 was, part of the insurance On-Ramp. They said the dynamics of the events were amazing. So congrats on that. But how can local companies, be part or help replicate this model in the region? And then the second part of that question is, given our geographical, location, how can, Generator better connect with the Bridge and increase, binational manufacturing business relations?
Yeah, I love that. Thank you for the kind words. Whoever came to OnRamp, thank you for giving it a try. The OnRamp format was born because my co-founder and I went to a conference, and we had to pay, I think it was $200 a head, and all of our startups went. So it was, it was thousands, if not tens of thousands. And I felt like they were getting a lot of advice, but our startups wanted customers. And this is where I think your team is so far ahead of the curve. Kudos to you guys for getting that right. And we thought, well, what could we do? And we thought, well, why don't we just have them meet with customers? We'll just get that going. So the very first event was actually a regional event, and it's something I would really encourage you guys to think about. And we got the local newspaper to host it, and we had all the local corporations go in a room. We gave them a list of all the local startups who were interested in meeting with them, and we let them pick their favorite 10. And after we had done that, we rented out Lambeau Field, where the Green Bay Packers play, which is now the partnership with Microsoft and Title 10 Tech there. And we did it with the Brewers, the Major League Baseball team here, and with the Badgers at their stadium. And after, I think, the 4th event, we were doing it quarterly. Kohl's Corporation came to us, if you ever, the retailer, and said, we'd love to meet some of the startups in Chicago, and this kind of partnership of these neighboring communities, much like what you guys are doing with El Paso and Juarez. And we went to Chicago's venture community and said, well, would you ever want us to work with you on this? And they said, yes, but could you make it themed? We want to meet insurance startups and manufacturing startups. And that was how we became more vertical. But it has that same community identity to this day of, the whole point of this is we want startups in the room with people who can make an impact for them and an inflection point. So I would encourage you guys, and we're happy to be a part of this, but just get a list of corporations, have the local startups in El Paso and Juarez apply, and just facilitate those, 10 or 15 meetings. And what we found is there was about a 7 or 8% hit rate, and the cost of the event was very low. And even if it failed, you were still practicing pitching and meeting people. And so I think that'd be one where, that I think that especially with the base of density you have in El Paso and Juarez and just that 100 billion volume number, I think that's great. And something you guys should definitely look at. And then in terms of partnerships with Generator, we I give you guys a lot of credit inviting me on and asking me that question. I think is steps 1, 2, 3, etc. But we would love to collaborate with the Bridge, and if there's opportunities for us to thread in our work, it's a very sincere offer. If any startups want me to join their one-on-ones and talk about their financing options as sort of that incremental, informal set of partnerships. And we would be grateful for the chance to formally partner on future cohorts and different programs. But whether it be the events and the corporate and networking side of it, we also run programs for, in addition to that corporate side, one I want to mention, we run events where we just introduce startups to investors. So not corporations, but startups to investors. Our last event was for exclusively Black and Brown led startups. That we facilitated over 1,400 meetings on one day with over 250 VC firms nationally. And I'll be reaching out to the Bridge team when we have our next event in June, and would love if the startups here would consider participating in that event as well. So please go to our website, make sure you register and apply for the on-ramps. It's free to apply. If you get selected, it's free to participate. And I'll be reaching out on the lightning rounds where we connect startups with investors. But those partnerships and anything we can do to help you facilitate events like that on the ground in Juarez, El Paso, we'd love to be as helpful as we can. Thank you for the question.
Well, appreciate it. And definitely, I think there's a lot of intersection overlap. We could create value for all of our markets. The one area you really emphasized was getting into the room with the startups. That looks or two funders. That looks a little bit different. Are there any tips around connecting virtually for pitches?
Yeah, we would. I think that's a great question. When we started, we did these cohorts of 5, and it was because we thought, okay, we can get him in the room for an hour with an investor. And our pitch to investors was, don't you get paid to look at deals? Isn't this for your benefit too? And so I think, if you divide the cohort into maybe smaller groups of 5 or so, and say, okay, this group, we're going to, try to reach out to different investors. Not everyone will say yes, but even saving the no emails is helpful. Getting them, maybe 10 minutes each. What we would do is we would say, okay, you got about 5 minutes to pitch, which is good. And we'd have a standard deck format. So I can do it by memory, where it's value prop on the first slide, your name and email, second slide opportunity, second slide cool traction, third slide opportunity. But we'd say, okay, you got about 20 seconds a slide, 30 seconds a slide, one image, one photo, one text, no more. And make sure you spend the next 5 minutes doing Q&A and asking them for a next step. And so we would do that disaggregated one-on-one reach out model, and that made a big difference for us in driving up that revenue and that financing total. What I'll say is you guys must have something similar in how you're able to facilitate a lot of these customer outcomes. And I think that's really remarkable and something that I'm going to be downloading with you guys about and similar. How can we learn from that type of thinking? So anxious in our next conversation for us to learn more about what you guys have been doing, but love the ability to exchange experience there.
Yeah, absolutely. And then this will probably be the last question here. And it's, how can we overcome challenges of small entrepreneurship community with tight control over access to capital? And there's a culture of, impetus in a region that often prioritize personal connections over innovation or risk taking. what are the real cultural changes for investing we can ask leaders and stakeholders to make, not just pay lip service to? So I guess it's more challenging, the investor side of the equation here.
So whoever asked that question, if you ever want to get a drink with me, it sounds like we have a similar life experience. I actually delivered a presentation to the International Trade Conference called How to Build a Startup Ecosystem from Scratch. And it's something I'm really passionate about, because in our 24 cities, that's oftentimes what we believe we may have to do, depending on how much is already there or not. I could say that we set goals around how many companies will go through the program, how many will raise follow-on capital, how many will get revenue growth that justifies a seed round, which is separate from how many seed rounds occur. Those are very different questions. And how many will have revenue growth that would justify an A round. And we believe with a dedicated model, communities that have that kind of, hey, we're going to pitch at least 40, 50, 60 investors each, per startup, and try to tailor those investment asks to the size and skew of the startup's needs, can create a startup ecosystem from scratch that gets to a competitive level in about 8 or 9 years. But it runs off of a metric for accountability on the growth of the businesses. And what I'll say is that the key question there that you were asking me about was about getting them in the room for financing. And that is very doable. But when we created our G-Beta program, that contract accelerator across those 24 cities, a big part of the pitch was exactly what you described. If a startup goes through a local university, first, that's a privileged position in and of itself. Second, they might get 2 or 3 introductions from the university to local alumni, local venture funds, and a national firm that's investing in university-themed spin-outs. So they'll get 7 or 8 opportunities, but those are from the university's ability to supply. That's not correlated at all with the startup. That might be life science investors who write $5 million checks, and you have an e-commerce company or an SME company that needs a $250,000 check. And so you need to orient the system from the startup or small business's perspective and get the 40 to 50 opportunities that are best designed for them, and not just because the ecosystem has 40 or 50 opportunities. And so that has made a world of difference for us, but I believe it's even harder the deeper you go in the process. Our ability to have those relationships at the seed and A level is much easier than at the B and C level. And it's one of the most difficult tasks of my life. I think about that every day of my life, is how do we build these ecosystems to have more accountability and better connective tissue. So whoever asked that question and is struggling with that, I went too long and I'm over my limit, but it's a wonderful question. These were all the questions you'd expect from a healthy ecosystem that's playing to win. So for what it's worth, you guys you're running a first-class shop, and I'm so happy for the participants in this program that they've got such a great opportunity and people who are so passionate about helping them succeed at this level.
Well, appreciate it, Joe, and of course, I think Mariana had told you we need to get you down here for some sotol, and experience just the border firsthand. We're looking forward for that opportunity.
I have committed that I will be there for the sotol. And she was very kind to make that offer. So I promise you I will accept and I will come. And in the interim, again, if anybody would like for me to join any of their meetings to talk about how they're doing, JJ and Ricardo and team, just send me a note and I'll be there.
Great.
Perfect. Well, thank you guys. And with that, we'll move it over to Orman, our provost and program director, who will be showcasing the companies that we're going to be running on this 4th cohort. This was great, Joe. Thanks for sharing your time and knowledge.
Yeah, thank you. Then, okay. Thank you, Joe. We appreciate very much the talk that you did. And I like very much the concept, the air traffic control. And definitely, let's make part of the ecosystem. We'll be more than happy that our companies also participate with your programs and your events. Thank you very much for the talk. I would like to to present the 32 companies, and we are very proud to have them. And we have 32 from El Paso, Ciudad Juárez, and Chihuahua from different service: digital transformation, organizational development, automation, metal mechanics, quality and inspection service, environmental service, and so on. Then today, I would like to welcome to the family for the new 16 companies for the fourth cohort. Can you go to the next slide, please? And the fourth cohort participants, bienvenidos a la cuarta generación del programa. We have AP&O, we have Torch Industrial, Border Proto, Fab Lab El Paso, MR Automation, GR Cutting Tools, the Cluster of Moldes y Troqueles, Ayala Digital, CITA, that there is a research center, el Centro de Innovación e Integración Avanzada, DCI, Top Labels, Fab Lab Juárez, Digital Security, Textile Medic, Sermetal, that is Servicios de Metalizado y Metalmecánica, and Grupo Valle Blanco. All of them, bienvenidos a la cuarta generación. Estamos por comenzar. We are ready to start. Thank you very much and welcome.
Muy bien, Orhan. ¿De aquí nos pasamos a las palabras de cierre o cómo andamos con eso?
Yeah, we are going to do the closing remarks from Alan. I think we are just in time.
Perfect. Well, thank you to all the new participating companies of the fourth cohort, Orman and Mariana and everybody on the team. I know how hard everybody has worked with this. You know, CIDE, Funax, Rudy, there's just so many people to mention to make this happen. So we have been encouraged by so many sponsors believing in what we're doing for this region. You know, building the ecosystem, as Joe was mentioning, is a task in its own. And in order to build an ecosystem and build trust, there needs to be, you know, a lot of people on the ship. And one of those persons on our ship who's been very crucial to the Bridge Accelerator is Alan Russell, who joins us today. And he'll be giving us some closing remarks. He's a personal friend, mentor, and I have the privilege of sharing, you know, a lot of good times with Alan. And just thank you, Alan, for taking the time and for believing in the ecosystem, for being part of the venture community, for being part of manufacturing, and just in everything you do. So I'll let it off to you, Alan. Hopefully your voice doesn't give out.
Thank you very much, Ricardo. I appreciate that introduction. Very gracious. This accelerator program is a remarkable initiative, and I can't thank Ricardo, the Hub Accelerator, Omar Sacedo from Microsoft for backing this and collecting the sponsors. And we are at Tecmo proud to be a sponsor of this program. Let me give you an example. We operate probably in Juárez 35 manufacturing facilities, encompassing over 6,500 operators, workers, technicians, management level people. Last week, on Wednesday, we cut the ribbon on a brand new factory, 250,000 square feet, that'll be producing 1 million adjustable bed frames in Juárez during this next year. And it's a long-term project, major investment, over $5 million. So when the head of operations for North America came down and he and I stood next to each other and we cut the ribbon, he said, now all we have to do is find local suppliers. They have 105 containers on the water from China to Juárez. It's astronomical. We already have 80 in-house. But the ecosystem, the supply chain, it has a gap. As you all know, there's $39 million worth of commerce right here on our border, going back and forth across this border. Less than 2% of it is captured by our local community. something's wrong with that picture. We've got to embrace this accelerator program and help develop these new suppliers. The highways are wearing out between the 5 Midwestern cities and Juarez. And if we think the infrastructure bill in the United States is going to help that, I don't think so. I think companies are going to require local supply. And with the Accelerator program, the mentorship that's offered through this program, those of you on this line looking to be a supplier, embrace it. It's just such an important element of our go-forward plan. But let me comment something about you that that's called an imposter syndrome. When you walk into a room to raise capital or to pitch to a company like Bosch or Lear, one of the larger companies, even walking in to see me, as a young, aggressive entrepreneur, maybe you're in your 20s, maybe you're even bumping 30, and you've got this product category. You walk in the room and the senior executives are looking at you, waiting on your pitch, waiting on what you've got for them, and you'll sink down in your seat and you'll be shy because it's a thing. It's a real thing. It's called the imposter syndrome. You're sitting there thinking to yourself, I don't belong in this room. How could I possibly present myself to a team of seasoned professionals like this and hold my own? I just want to assure you that I have felt that when I had dark hair. I felt sometimes that I could be an imposter in the room. But let me remind you that success goes to the bold. So be bold. Embrace your passion. Do this. Step forward. And don't think you're an imposter. You're part of the ecosystem and you deserve to be there. Thank you so much, Ricky, the whole team. It's been great to hear this presentation. It's probably the best cup of Joe I've had in a long time.
Thank you, Alan. Thank you for that, Joe, for that, Alan, and also to Joe and to Orman. And as you mentioned, Alan, you know, the companies need to be bold, and that's what we need. That's wonderful. Thank you for sharing that with us and your experience. We appreciate it, Alan, and I know that you have made yourself available for these one-to-one facilitated meetings, which we have all worked for together among other leaders in our community. So we're grateful for that and for the time. With that said, this concludes our kickoff virtual fourth generation for the cohort. We welcome everybody from the fourth cohort, and we look forward to having these one-on-one conversations as we move through the program. Thank you, everybody, for joining us today. Gracias.
Thank you, everybody.
Gracias.
Gracias. 3 minutes ahead of time.